Listen and listen attentively. Listen and listen attentively. Today, we're talking about a special POI called breaker block. All this time, all this time, we've been talking about order block as our POI, and we've also been talking about proportion block in some cases. And what other POI again have we talked of? I think there are some cases we talk about FVG, some cases fair value gap, that's it. But there is a special kind of block called the breaker block, and it is actually a very, very important one in trading. Now, look at this. Look at this. In some scenario, you will see a case like this. Market goes up, comes down, go up, come down, up again, maybe somewhere around here, and come down. Good. Now, there is something that happens to the market. If the market goes up, it is taking out something. If it goes down, for example, it's taking out something. Now, in an uptrend, whenever market goes up to take the previous high to break it and create a break of structure, there is something broken at that particular point, and it is called a key level. Can you hear me? You're mute, please. Put yourself on mute. Good. It is called a key level. Now, the high here that gets taken out before you get the break of structure, it is called a key level. Here also is a key level. Here also is a key level. Here also is a key level. Now, in the formation of structures, now there are high tendency of you having an order block both here and here. Now, whenever you get this particular one, the one down here, if you get it taken out, for example, if price retraces and take the other block present here, you get a change of character. Good. But there's always another block also here that we've not talked of. And that other block is called, so it's always taken out to get what we call what? A break of structure. So when the other block here gets taken out, you get break of structure. When the other block gets taken out, it's called a change of character. But in many scenarios, you have another block here. You also have another block here. We are looking at the trade the last time, and Good News said he saw another block here, and he decided to enter the trade because it was another block. Okay. He was asking me why I did not enter the trade. Because before the other block, there was something like an engineered liquidity before the other block. And he was like, why shouldn't I take the trade? And I was like, the only reason why I should not take the trade is because this is an uptrend. Now, the point is that in an uptrend, you don't always only see other blocks at the bottom. You also see other block at this particular point here that gets broken to get a break of structure. And now, listen to me very, very well. I'm going to give you a simple definition of what a breaker block is in a way that you should not ever forget it. Breaker block is a failed order block. It's a what? It's a failed order block. Whenever an order block could not hold maybe the momentum of the market, you get a breaker block. And after another block gets broken, it becomes a breaker. There is a high tendency of market returning back to that breaker block now and reacting from that particular point. Now look, there is another block here, for example, and we are in an uptrend. Listen to me, follow me closely. We're in an uptrend. Now, market comes here, take the other block here, takes it out. It becomes what? It becomes a breaker block right now. Now, after market has gone up to create a new higher high, there is a high tendency of market returning back to that other block now, which was here, then reacting from it. Now, at this particular point, reacting from it, it is no longer called an order block anymore because this particular momentum here broke it already. So when market is coming back, we say market may use the breaker block as a what? As a point of interest. So what is breaker block? Breaker block is basically a failed order block. And this is basically how some movement happens in the market. Basically, look, another one can be here also. There's another block here. before this move comes here. Now, market comes back, take it out, it becomes breaker. Market have the chance of what? Of returning back to it again, then bouncing off. So this is called the breaker block. This is just a simple explanation of how this works, but I'm going to look into the chart firstly so that there are levels attached to it that we have to like start learning and learning and learning and learning and learning. It's not going to be a long class, but I really wanted to like brief this thing to all of us today. Okay, let's do something quickly. Can you see that this is another block here?
Yes.
Can you see it? Can you see it very, very well? You have a bullish candlestick, which is a white candlestick. After it, you have a huge engulfing candlestick, a very long one, all the way from here down to here, then which is a different color. So you have a white candlestick, you have a black, then this one can be of any color at all. But the point is that you have this, then you have a long candlestick close to it, then you have this. You get? So this is an order block right here. This white candlestick for this large black one. So I can mark it out and I say it is my order block. And then mostly after an order block, you get an impulsive move. And that's the move you had all the way down here. So I mark it out. What am I waiting for? I'm waiting for price to get back to it. Then I get a reaction. But I will not take it because I know this is an uptrend. So I will not take this. Why? Because in an uptrend, I don't take sales. Simple as that. But look how it happened. Market came all the way down here, got to it, broke it slightly, then reacted down backward. Now what happened? At a point, it got broken entirely. Market surpassed it. So whenever an order block can no longer stand, it becomes what we call what? A breaker block. So this is basically at this particular point, a breaker block now. Are you with me? Are you with me?
Yeah,
Yes,
man.
boss.
Good. Good. Now, this particular guy has not played out fully yet. But if there is any chance of market returning back down here, I can take it. I am taking it not because of an order block anymore, but because of what we call what? A breaker block. Are you with me?
Yes, boss.
Yes, sir.
Good.
Yes, sir.
Good. Good. I am not give you the application of this thing today and how we are going to, but I'm just going to brief you to you so that you can have in case. Because, of course, as we go, um, look at another one here. Can you see something? Can you see it?
Yes, boss.
Good. How about this one? Can you see this particular one here?
Yes.
Good. Now, look very, very well. If I mark this other block here, right now, price left it, went up slightly, then came back to it. It's meant to hold. Did it hold? No. You know, it got broken. So it becomes a breaker block. Now, it's actually a breaker block now, but it doesn't mean that it is wasted. It is not a waste. You mark it out, you bring it out. Also, why? Just in case market returns back to it, you can enter a trade in form of what? Of a breaker block. You can see how well it got respected around here. Market came all the way down here, create a little liquidity, engineer liquidity here, came down here, then boom, touched it, then all the way down here. Can you see that?
So technically, a failed order block, let's say in the bearish market, can be used to like further sell the market, because usually now if you're marking out the bullish order blocks is to buy the market, but because it's in a downtrend, you sell the market, right? Boss, can you hear me?
Yeah, correctly, but it depends on the trend. Like for example, it can be used in a bullish market. It can be used to continue the trend. It can be used as
Yeah.
trend continuation also. Like for example, I can call this my order block around here. My order block here at this particular point. You can see one here, order block available. Then here, of course, price came from it, came all the way down here, went back up. Okay, it is meant, of course, to touch the order block. Start coming down, but no, price broke it. Immediately price broke it, boom, went back up. Breaker block. So breaker block is one very, very, very strong point of what? Interest also. Like for example, this is actually not white, but I can decide to use it as my order block because, of course, logic over pattern, we're not in primary level anymore. So another block here, the candlestick before the engulfing move, of course, I mark it out. Price got back to it. Price got back to it here, broke it up. It becomes a breaker block. Automatically, I mark it out, take it down here. What happened is your ability to know your many points of interest. Before this time, you were waiting for just your breaker, your order block. Then gradually, I added liquidity level. Gradually, we talk about QMR. Then gradually, we talked about FVG. And today, we're talking about what? Breaker blocks. And there are still more to come. Mitigation blocks, blah, blah, blah. I have mentioned proportion block already. And just taking this in bit by bit. Now, when market is it's coming down back into your zone, your knowledge of all these POI gives you edge of when to enter. And that's the reason why I'm bringing them to you. So today I am introducing breaker block. And what is breaker block? Breaker block is telling you that a failed order block is not useless. A failed order block can be used. Just like when they say disappointment is
Boss, you're cracking up, bro.
some different for blessing or whatever, right? To algo market structure. Who is not on mute? Who is that? Please mute yourself. Mute yourself. So the same way, a failed order block gives rise to breaker block. I told us 2 days ago, a failed basic market structure gives rise to algo market structure. The same way, when an order block fails, it gives rise to breaker block. I can have another example. I think somewhere around here. I think I've seen something again. Look at another block here. Another block here, of course. I mark it. You see, this is actually very, very accurate. Very, very accurate. I mark the body because the wick is too big. This is the body of it, of the other block. And price came from it all the way down here. Price started going up. Then what happened? Broke it. And it's an uptrend. Broke it, went up all the way down here. Came back of what? To it, touched it, then boom. All the way up. Breaker block. Breaker block. So it is precise, it works so well, it is powerful. Very, very, very powerful. Very powerful. Are you with me?
Yes, boss.
Yes,
So
sir.
simply trend continuation.
What you said?
I said so simply it's just for trend continuation, like you said.
Trend continuation works more like how the other block works. Okay? Just that most of the times it does not allow price to get to other block because it is most of the times ahead of the other block for the POI. Like for example, if you have something like this, a trend like this, I'm all the way here, okay, maybe here, up again, here, and then up again. most of the times order blocks are at the place of price integration, at the place whereby the momentum begins. You get this is where mostly order blocks are. Most of the times, I'm not saying all the time, most of the times, but breaker block, of course, they are from the previous high. So they are usually at the top here. So in a case liquidity created here, your most times touches your order, your breaker block here and goes back. Up. So there are some trends that you see something like this. It just stops at your breaker and then boom. The same thing happen here to your breaker, of course, and then what? Boom. So this is actually the situation of so many. Can you hear me?
Yeah, can you repeat yourself? I think network.
Yeah, that's what
but the network is
yeah, network is actually bad. That's why I'm asking if you can hear me, because network was bad. So like I was saying before, in many a times the absence of breaker block do not allow price to return back to your other block before going up. Many scenario, your other blocks are usually at the bottom part here, somewhere around here, also somewhere around here and around here. While your breaker blocks most of the times are at the top of your previous high, which is somewhere around here. You get, you see, someone is complaining that the class is actually very is breaking and stuff like that because of network. So, but like I said before, I'm not doing much today. I just want this introduction, and I intended for it 13 so that every one of us can go back to our chat and start working for the new week. But do you understand what I've talked about so far?
Yes, sir.
All right. If you don't understand, please ask the question.
Not really, sir.
Any question?
Hello, sir.
Yeah, I can hear you. I can hear you.
Sir, your network has been breaking because I'm in the village. So network has been breaking since the beginning of the class. So I didn't really get it.
You get to
All
farm
right,
cassava.
it's okay. Most of the people have been complaining of network. I think today is a bad day for the talking about network. So I get that. But the point is that I just want to brief us before I go deep into it next week. So this is not the main class, but I just want to like give us an idea of it so that when I introduce it, you approach it in a whole different way compared to like, when I just like introduce something. That's why if not, my intention was not even to like mention this class today. So don't worry, I have 40, I'll drop it in the group. But if I check it and I see that it's also breaking, I won't drop it. So that's not a problem. But for those that were able to pick one or two things, good luck to you. So any other person with anything to say? Good. All right, nobody, please. Yeah?
Sir,
Who
I
is
have
that?
something to say.
Okay, please say it, say it.
Is what, sir?
I can hear you.
Is
Say
what,
it.
sir?
I can hear you. Yeah, say it.
You have not been
Yeah, you can
recording
talk.
the other classes. I don't know why. And it's really hot. I don't know if you're hearing me.
Yeah, I can hear you.
Yeah?
I can hear you. I can hear you. Yeah.
I said, sir, you have not been recording the other classes, and it's really hot.
Okay. The previous class on algo market structure. Can you hear me? Can you hear me?
Yes.
Network is terrible. The previous class on
Yes.
algo market structure is recorded. Okay, good. The previous class on algo market structure is recorded on my cloud. I'm going to retrieve it tonight and I'll drop it on the group. I recorded that particular class because it was very, very important. But some of the classes I refused to record were more about us like having regular conversations. The class, some like were like 2 hours and all that because we were like briefing things, polishing things, adding sugar, Maggi and stuff. So those are not like kind of professional classes whereby I would just record and keep in the group. They were too long. But we talked about algo last, I think 2 days ago, and I made sure I had it recorded. So don't worry, I'll drop that in the group. And also this particular one is recorded. So don't worry about it. If there is any class that I know, oh, this is actually a professional one, it's very, very important, I'll make sure to record it. Good. But I always advise people be in the live session so I can ask questions. Is that okay?
Yes, sir.
Good.
Yes, it's
Look,
sharp. It's sharp.
all right, good. Like I said before, I think market should be open now, right? Or a few minutes to go, market will be open. It does not matter if you are trading a demo account or a live account. What matters is that you have to take it seriously. Forex is not it's not a side, whatever. It's a profession. It's a field. It's a career. You have to take it seriously. If the demo account you have, it's a $10,000 demo account, what do you do? Make your plans. Okay, I have 10K in this particular account right now. This particular week, I want to use, let's say, $500 from me to trade. You get that kind of a thing. So like it's kind of allocation. Okay, I'm giving this week $500. Okay, if I'm giving this week $500, good. I have 5 days in the week. How many trade maximum do I expect myself to take? Some of you trade too much. You keep pressing buy, sell, buy. It's not done like that. The reason why I have so many of such trades because you don't have setups. You are just pressing. You look at the chart. You be like, you feel like you go sell from here. You sell. You be like you go buy from here. If you have setups, if you are using setups, you can't be trading that much. Okay, so let's say you want to trade like you want to be taking like 2 to 3. Look, let's say 3 per day. That's actually 3 times 5, which is 15 trades a week. 15 trades a week. Okay. You ask yourself the next question: how much do I want to be risking per trade? You say, okay, let me risk like $10 per trade. You say, okay, 10. 15 times 10. Good. Oh, that's actually $150. So if you like giving $150 for this particular week, and then you trade, then at the end of the week you review how many of these trades did I lose, how many did I win out of the 15. You mark the number of lost trades from the 15, you mark the number of won. Then from there you can gain your win rate. Then next week the same thing, you repeat yourself. So you see if you are growing or if you are not. You don't just enter MetaTrader, you press buy, sell, buy, sell, buy, sell, and you keep on doing this thing. You can't even monitor your progress. You can't even, you're not even holding yourself accountable for your trades. You are just placing trade anyhow. It is not done like this. Change today. May God bless us in the name of Jesus. Amen. And everybody, welcome to a new trading week. I wish you all luck. Goodbye.
Thank you, sir.
All right.
What, sir? I know they come class now, no.
Nala, you